Hello traders, welcome to my new channel. I'm here to help you learn the stock market from the absolute basics all the way to a pro level. Today we are talking about candlestick psychology and how to read what market is actually telling you. Let's jump straight into the chart.
Let's begin with the 4-hour time frame to understand the broader market structure. Initially, Nifty rallied strongly after breaking the market structure and eventually reached 24500 supply zone. As expected, this area attracted institutional selling pressure and buyers failed to sustain higher prices. Higher prices. Now, the rejection, the rejection from supply followed by an aggressive bearish momentum notices the sequence of large bearish candle followed by healthy volume followed by healthy selling volume. This alignment between price and volume confirms that sellers were in complete control during this phase, driving the market rapidly towards the demand zone. Now, this is where market psychology begins to change. Despite the strong bearish candle closing into demand with an elevated selling volume, with an elevated selling volume, the lower wick tells us this lower wick tells us an important story. Buyers did not allow price to remain at the lows. They absorbed a significant portion of selling pressure, showing that institutional demand was active in this area. In this area. So the next session opened with gap up. See, previously market closed here, but next session opened from this level. So this is a strong bullish candle. This is a strong bullish candle. At first glance, this may appear to be beginning of a new uptrend. However, after such a sharp decline, a strong bullish candle is often the first retracement rather than an immediate trend reversal. So the following bearish candle provides another important clue. Although sellers returned into the market, but the candle was relatively weak compared to the previous selling momentum. This suggests that while sellers were still active, their momentum was beginning to slow. Moving to the next session, we again notice a gap up opening. Here we are noticing a gap up opening followed by consecutive bullish candles. This indicates that buyers were gradually gaining confidence and attempting to recover from the earlier decline. However, as price approached resistance area, this overhead resistance area, sellers became active once again, leading to another gap down open. See, previously session closed here, but market opened level, from this level, which is a gap down opening, which is a gap down opening. Even after opening lower, buyers stepped in during the session and absorbed much of the selling pressure, preventing another sharp breakdown with a strong bullish candle. with a strong bullish candle. Now, if you closely observe the recent price action, an interesting pattern emerges. See, after this bullish candle, we can see several bearish candles, but all of them remain within the range of previous large bullish candle. Previous large bullish candle. From a candlestick psychology perspective, this is significant. Instead of creating fresh lows, lower lows, sellers are only retracing inside this bullish candle range. This suggests that the market currently in a consolidation or retracement phase rather than resuming aggressive selling. Look at the volume. If you look at this volume, selling participation has gradually reduced compared to the initial bearish impulse. At the same time, buyers continue defending lower levels, these lower levels, whenever price approaches demand. This indicates that the balance between the buyers and sellers is becoming more even. So the market is now at an important decision point. Now, if you observe the next session, the last two candles clearly shows buyer taking control. These two large bullish candles clearly saying that buyers are taking control, breaking this upper level of this CRT candle. The first candle, this one, the first candle broke above the key resistance of 24229. Key resistance of 24229 with a strong momentum and with a strong volume. The second candle continued the bullish structure by creating higher high, this higher high, closing near its high. However, Nifty is now approaching a major supply zone around 24500. 24500. If buyers manage to close above this zone with a strong volume, the breakout will confirm and the next target could be 24650 to 24700. If sellers defend this area, if sellers defend this area, you may see a healthy pullback before the trend resumes. So, global market sentiment will also play a key role in determining the next move. Now, We completed our higher time frame analysis on the 4-hour chart.
That is for today's video. If you found this breakdown helpful, please hit that like button and subscribe to the channel so you don't miss the next strategy. Drop a comment below if you have any questions about this setup. Thank you so much for watching, and I'll see you in the next one. Happy